Apes and apettes, welcome back to the channel. I hope you guys had a great weekend. But as you probably already know, there was a lot of developments over the weekend that are going to affect the markets starting on Monday in a quite substantial way. As well as that, we have earnings on March 1st. That is on Tuesday. And then on top of all of that, we have a lot of speculation around possibly seeing the first day of the MOAS on March 3rd. So I want to give you guys my take on all of this information. So let's not waste any time. Hit the like button and subscribe to the channel to stay up to date with the most comprehensive data and information around AMC and the markets, with the sole intent to make you guys money. So without any further ado, let's get into it. Get yourself some free stock, link down below in the description, as well as come join the trading community and come trade with us, ask questions, do all of that stuff. Link down below in the pinned comment. First and foremost, let's take off the lucky glasses here. I hope that's not a bad omen, but it is very hard to see in them. Nevertheless, I hope it's a good sign heading into this week, and I thought it was very appropriate for this video. As far as AMC on Friday, we were only down a little bit. We've seen a very strong recovery. If we pull this out to the 1 minute candlestick chart, you guys can see we rose from the depths. We were down to $16.50 per share, which was in line with my price target for last week. Only down about 0.11% in regular trading, down 0.23% in after hours trading, but nevertheless seen a very strong recovery. I believe down about 5% down here, if not a little bit more, and almost recovered positive. At times we were actually positive on Friday. So that to me was a really good sign. The fact that all of the fear in the markets did not amount to a massive red close on last Friday. Very much a positive sign heading into this week. But we did have a lot of developments over the weekend, and most of Russia's banks are now barred from SWIFT. And if you guys are unfamiliar of what SWIFT is, it is basically a secure payment processing network, meaning if you want to send $1 billion or $1 million from Moscow to Washington DC, from Russia to America, then that's the way that you would do that. So a lot of people use SWIFT and don't fully realize it, as well as payment processors like MasterCard and Visa also use SWIFT. On top of that, SWIFT is implemented in all means of transacting imports and exports to and from a country. So it's basically cutting Russia off from the outside world. And even though we do like 3% of America's trading with Russia, Europe does a lot more. And unfortunately, in that aspect, the broad markets are all tied to each other. So what tends to happen in Russia or in Asia tends to affect us as well. And now we are going to get a lot of fear, in my personal opinion, about what is going to happen next. Gratefully, Ukraine is holding up very well, and it looks like the tide is starting to turn in their favor. We have thousands of weapons from all different countries headed to Ukraine, anti-tank missiles, anti-aircraft missiles. Hopefully that does help Ukraine to win this war, which I actually do think they will, believe that or not. In the end, it is getting very bloody, and without getting into any numbers here, Ukraine does look primed to win. Momentum is definitely on Ukrainians' side. But the fear is going to be here. Whether Ukraine wins or loses, you're heading into a Cold War, if not World War III. And I think that fear alone is going to, whether that is a full-on war between a bunch of different countries or just a Cold War, there will be a lagging fear on the markets here for the near term. But the markets only care about the Fed when all is said and done. And that Fed meeting is on March 16th. And we do have the CPI numbers that come out March 10th. So that is going to directly feed into the Fed rate hike monitor tool. And this is what I really like to watch a lot. And this is what a lot of Bloomberg analysts, a lot of other analysts do like to cite from. And the higher this 0.5% rate hike probability goes, the more fear, the more red the markets will become. And on Thursday, you only seen a 20% probability of a 0.5% rate hike, and the markets rallied a lot, especially in the NASDAQ. On Friday, you seen that probability rate of a 0.5% rate hike go to 24%, And the markets did well, but the Nasdaq did not do nearly as well as what the Dow did. As you can see, Nasdaq up 1.64% and the Dow up about 2.5%, a whole 1% higher. The Dow performed on Friday, and that is due to the rate hike expectations. And if we do get a high rating of inflation on March 10th, you're likely to see more pain in the markets. But even with the Russia-Ukraine situation, the longer this drags on, likely the more fear that will be in the markets, and this is going to be a very volatile time. You could see some days where the markets are very green, some days where the markets are very red. We are in historic times of volatility as well as historic levels of put activity on single stocks as well as the broad market. So the talk on Wall Street is that really the rally that we seen on Thursday and Friday was artificial in the means of a lot of big shorts were covering on their short positions because retail investors started to buy into the markets early in both of those trading days, triggered market makers to hedge out these short positions and essentially cover on them, which did drive the markets up. So this is not really a fundamental rally until we see the Fed come out and say, hey, we're facing times of uncertainty. We don't know what's going to happen over in Europe. We are going to go, very light on the economy. We're not going to pull Volcker you. We're not going to raise rates 100 times in a year, damn near what it feels like at this point. That's when the markets will see a fundamental rally, and that's when the markets will hold up a lot better. Now, switching to next week for AMC stock. Like I said, you do have earnings on Tuesday, which is going to be March 1st. But on top of that, you also do have Monday, which you're going to see probably a lot of fears and uncertainty around Russia and this whole SWIFT situation. And like I already described, SWIFT has a big implication to the global economy. So I do think you're going to see a red day on Monday. It's a toss-up on Tuesday between whether we are going to go up or down on earnings. But I do think we're going to see a decent move to the upside coming on earnings because AMC is down so much, and you are seeing a lot of very bullish 13F filings that are coming out from institutions that have a lot more information than us. But this goes without saying, I am not a financial advisor, so even though I think AMC earnings will be good, in no way, shape, or form am I telling you to YOLO your whole portfolio in weekly call options. You will likely lose all your money, and even if you have a hunch, put a couple dollars on it if you want to. Don't risk the portfolio. Not financial advice. I think that is more sound investment practices. Now, let's get into the data that you need to know, and then let's get into the actual price prediction as well as the technical analysis. So, Ortex is giving us a 20.35% estimated short interest of free float, 104.24 million shares that are sold short, cost bar max of 2.32%, utilization of 100%, and days to cover at 2.34. Not too much has actually changed as far as this is concerned, but it's looking really good. Even consider all of the positions that we don't get disclosed, the synthetic short positions, you name it, the short interest and the situation is even much higher and more bullish than you could ever imagine. As far as the max pain for next week, that is sitting at $17 per share, and the Stocko tracker data has us sitting at about 9,300 calls that are in the money, 58,000 calls that are out of the money, 5,300 puts that are in the money, and 34,500 puts that are out of the money. So not a big amount, but still, like I've said for a while now, there is very little calls that are actually in the money compared to out of the money. Even when you're talking about less actual open interest on that expiration. Compared to last week, you had 137,000 calls that were out of the money. This week, 58,000 calls that are out of the money, but you are seeing another very low week of calls that are in the money. So if you do see that move to the upside, you could certainly see a little bit of a gamma squeeze. And as we know, you could see a lot of options pile onto an option chain very fast if you do see a big green day. So nonetheless, content with what I'm seeing, but I wouldn't expect all too much on that front. Really, if we do see a rally, it's probably going to be a lot of FOMO buyers, people that have sold out of AMC that are trying to time the stock and do all that, which is never a good idea. I've never sold a share of AMC. I know my conviction, I know my trade, I know the data here, the fundamentals, I know the short squeeze, everything to know about AMC. I'm not going to try to time the stock. I'm going to buy and I am going to hodl my shares. Whatever way you want to say that, does not matter to me. As far as the technical analysis is concerned, you are looking at a bullish MACD, surprisingly or not. It's still a little bit bullish on the daily candlestick chart. You can see this divergence is starting to widen back to the bullish side as well. We have remained bullish since about February 1st. So the sentiment overall is definitely looking very good. The 50-day moving average is at $20.89 per share. So if we see a good earnings, I think it's likely we could go really to about that $21 range, probably find a little support. And if we break out strongly above that, maybe on Wednesday or Thursday, we could actually see that move to about $23 per share. But my price target by the end of the next week is going to be around this $21 price, around this 50-day moving average, because I do think AMC earnings will be good, and I do think you will see resistance around that level. So give or take about $1, I think $21 to $20 per share is very reasonable and respectable by the end of this week, and I think you should be very happy about that if we do end up seeing that play out. Like we have seen, these price predictions have been very accurate lately and literally getting it down to that $1 range. So that is my price target. As far as the other data that you guys need to know, let's go ahead and pull up the Bollinger Bands. That's going to be a very important level, and we did close above that. So you're also seeing a lot of support at this 20-day simple moving average, which is at $17.13 per share. So it does look like in that regard as well, we are definitely set for that bullish move to the upside. As far as the RSI is concerned, let's go ahead and pull that up. Bear with me for 1 second. Where is that? Right here. You can see the AMC stock is slightly on the oversold territory. It's kind of in the middle, but it's definitely not an overbought territory. It's not in, too oversold territory, kind of in the middle, but slightly on the oversold side. So all of this is looking very good. We're definitely seeing a lot of support at that $15 price. If we do, for whatever reason, just see a very bad week this upcoming week, $15 would really be my worst case scenario. The only way you go materially or substantially under 15 is if we see mass panic, mass capitulation, you see mass fear in the markets, which I don't think is going to happen. So all in all, my price target, just to reiterate, in between $20 and $21 per share. And go check out some of my last videos if you guys want to learn exactly how I plan to trade AMC stock. And if you want to skip that and come join the trading community, link down below in the pinned comment down below. Get yourself some free stock as well, linked in the description in the link down below as well. Thank you guys for watching, and I will see you in the next one.